trading economic data, trading big news events, you know there's going to be opportunities, kind of like the Federal Reserve not changing rates today. If you're not getting prepared for those types of events, then very, very bad, Jerry. You've got to get the Babu finger wag or the Matumbo finger wag. If you're not preparing for these, if you plan on trading when the Fed is coming with an interest rate decision or an oil number comes out or when CPI hits or GDP in the morning, then you're just essentially wasting your time. You've got to have a plan of action, whether you think it's going to move or not. What is your plan and how can you prep? The market's going to do what it's going to do. It's your job to be prepared for what might happen. And it all starts with identifying whether or not there's going to be something to work with. So, you got to get yourself an economic calendar. I'm just going to drop down my Benzinga Pro because they have a fine economic calendar of their own where you can scan every single day to see what is coming through. And obviously the big one that stands out sometimes on a day like today is going to be the Fed, but you can get it all across from US, Europe, whatever you happen to be trading. You get the time, actual, consensus, so you know what it did sometimes last time, what it's going to do the next time, and then from there, identify whether it matters to you or it's something you want to trade. Now, here's the thing. It's all well and good to know, okay, fine, the Fed's going to come at 2 o'clock, or we're going to have inventories, oil inventories at 10:30, or you're going to get CPI at 8:30. But from there, you've got to decide if there is a trade, where am I going to express that trade? Now, if you're trading an interest rate decision, you've got some options. You want to go to treasuries, trade some TLT, you can do that. You want to go over and trade some gold, you can do that as well. Sometimes that might be the mover. You want to go over and trade some big cap tech? Okay, have a couple of names in mind that you think might go on said move. You can trade UVXY if you want to. There's lots of different things that you can trade. On an oil number, you're probably just looking at oil futures. And that gas number, you're looking at that, maybe in equity. But you've got to pick your poison and, if possible, have it be something that you're comfortable with the way that it moves, right? So if you're comfortable with the way equities move, then pick an equity that you think is going to react. Around the Fed, I like some big cap tech and growth names off of key levels. There are traders on our trading floor here that love to trade GDX. You've got to know and be comfortable with what is going to move and how it is going to move for you. So know where you want to express that trade, know what time it's going to happen and all that good. The other thing that you have to consider is what matters. When a CPI number comes out, maybe there's a specific subset within inflation data which has mattered more than last. Maybe you're looking at housing a little bit more. Maybe you're looking at the core instead of the primary. Think about all that in advance so that when you're reacting, you're not just saying, oh, the headline moved a little bit, but wait a minute, I care more about how the core did or how about housing did. Let's make sure that's in, or also I'm not trading it. Those are the little nuances that are okay, because to not take a trade sometimes is the best thing to do if it's not setting up for you. So now that all that is out of the way, you've got to be able to set yourself a plan. I think a lot of times what ends up going awry for some people is they don't end up having a defined plan of action when it comes to those events. So I'll give you an example with the Fed here, right? 2 o'clock, you get a rate decision. At 2:30, Powell hits the podium. So you have a couple of things that can happen. You can either have what will happen. It's going to go to a 3-minute here. You can have what will happen today as we're doing this, which is no change. You can have almost 100% certainty that there will not be an interest rate change. In that particular case, it's what does the Fed say in their comments and in the Q&A that's going to move the markets. So at that point, the 2 o'clock move, I'm expecting an inside type of move, and I might look for simple support and resistance type setups. If that were the case, I might look at a Qs off the bottom. Anticipate on a drop, I just want to scalp the bottom, short the top kind of a move. That's one way to look at it. Then, if I think that the big move or the real event is when Powell's answering questions, then at 10:30, I'll look for a trend trade. If I see us making higher lows after he makes maybe he makes a comment that indicates that they might be loosening up to the idea of cuts, or the dot plot indicates more aggressive cutting, those kinds of things can give us reasons to go stair step up, and I might be looking for higher lows and trend and then holding on for the remainder of the afternoon. Those are the types of things you want to know in advance. What time am I looking for what? What do I want to hear? What style of trade am I going to go into? Definitely scalp trading if I'm not expecting them to make a move. And I know a lot of people don't remember when you used to have a little bit of uncertainty around whether or not they're raising or cutting, but when that is true, you absolutely 100% want to be ready for the move at 2 o'clock. Now that was a while ago, it's been some time since we've actually had uncertainty, but when there is uncertainty, that initial move can be gold. The example would be CPI the last couple of years. Not so much anymore, but when inflation was really running rampant, the initial move on CPI was everything. You just want to take a breakout trade there because it was moving the markets in that fashion. But in that case, you know where you want to express that trade. Do you want to go into the Qs? Do you want to go into TLT? Do you want to go into your equity? You know that you're trading the actual number because it's what's moving the markets. That's the same thing if we had uncertainty with the Fed. If I don't know with 100% certainty or 99.9% that there will be no change, then I would be trading that 2 o'clock number for some kind of a breakout and rally. But that's not the case today. So I'm thinking range-bound trade. Know it in advance, so when it happens, you're ready to just hit your keys and be locked and loaded and ready to go. Now, one of the things that you will find that I like is a bit of a post-move trade is these events will give you opportunities to unlock key price levels. So this is going to take a little presumption because the Fed hasn't happened today. But when you get a big move in reaction to a big event, a lot of what occurs in that first melee is simply the market makers, the algos, refusing to make a market. They pull their quotes. That's why things get really thin when you're watching your level 2. And then you get a big move because less money can move the market more when there's less liquidity. So that first float up or down, wherever it might be, that's that liquidity gap. Where they make a market again, let's just say maybe Powell says something nice. We make some tops at 425 and they're making markets and it consolidates there. I always mark those types of levels off. Like if this is what it looks like on the Qs in the afternoon today, where it holds a level like this 425, I'd be like, this is my Fed top or Fed bottom, whatever it happens to be. And then for the rest of the next week, I'm using that as a significant price level. In liquidity vacuums and news events, you will have levels created that are very important for you to use. Maybe you don't execute off the Qs. Maybe you use it for resistance and then you short something else. Or breakout through that level gives you a trade. Liquidity events are huge, huge pieces of information for any trader. Don't just make the trade on the news event and then forget about it. Be sure that you start charting the significant price levels where the market makers are coming back, where the buyers are there, where the sellers are there, where the equilibrium points are, because that's all very, very useful information to you. And if you're not trading around and you're just sitting it out and then just watching because you've never traded that news event, then all the more reason why you should be jotting those things down for your preparation. So know when it's going to happen, know what's important to you, know where you're going to express the trade, have a plan of action for the style of trade that you want to do, and then make sure you jot down those key levels that are established when you have a big economic event or economic number, kind of like we're about to see the Fed today, this afternoon. Let's see what happens when Powell hits that podium. Always a market mover. That's the real deal. Trade those economic numbers and at least learn from them if you're a beginning trader and you're not ready to take that leap.